This is Fintech Insider News. This week, NatWest, HSBC and Lloyds face rules change in regulatory shakeup. Adyen agrees a €750 million deal for loyalty and incentives platform Talon.One, and Revolut are to open their first physical store in Barcelona. We'll be tackling all of this and more on today's news show.
So good, so good, so good.
Everything you want for summer is at Nordstrom Rack stores now, and up to 60% off. Stock up and save on the brands you love like Vince, Sam Edelman, Frame, and Free People. Join the Nordy Club to unlock exclusive discounts, shop new arrivals first, and more. Plus, buy online and pick up at your favorite Rack store for free. Great brands, great prices. That's why you Rack.
Hello, and welcome to episode 1060 of Fintech Insider News, brought to you by 11FS, the 5-time consultancy of the year that works with financial providers big and small to build the next generation of financial services. I'm Laura Watkins, Director of Media and Marketing here at 11FS. To help me unpack the biggest and most interesting stories from fintech and financial services from the past week, I'm joined, as always, by a brilliant panel of guests. First up, we have a welcome to the show for Michèle Richner, CMO and Managing Partner at Tenity. Thank you so much for joining us today, Michèle. Could you please introduce yourself and Tenity to our listeners?
Sure, absolutely. Hi, Laura. Great to be here, and thank you so much for the invitation. So Tenity is a global fintech-focused venture capital firm and innovation platform. We work with financial institutions, corporates, tech firms, startups, etc. Currently, I'm very much focused on the intersection of fintech, AI, digital assets, and we invest across Asia, Pacific, and Europe with hubs also in those regions. So from Madrid, where I'm based, to Zurich, London, Singapore, presence also in Istanbul and Hong Kong. And yeah, me personally, I'm the CMO. I sit more at the intersection, of course, of fintech, venture, and brand, right? So I'm very much excited for the conversation today.
Wonderful. Well, yeah, thank you so much for joining us, and can't wait to hear your insights. Next up, we have Will Hay, Principal at Flagship Advisory Partners. Welcome to the podcast. Could you tell us a little bit about Flagship and what you do?
Yeah, sure. Happy to. So, Flagship Advisory Partners is a strategy boutique. It's entirely dedicated to payments and fintech. We have actually 4 offices around the world, despite our size. So the US, EU, and of course, UK, where I'm a co-founder of our London office. Although I worked for many years in payments consulting in the US before that. Flagship is specialized, I'd say, both in M&A advisory, but also in corporate strategy. So we have a sort of unique position of being able to look at where the capital is being invested, sort of the exciting sort of new assets in the market, but also supporting very large PSPs, retailers, banks, and seeing how they're choosing to innovate or move forward on product strategy.
Brilliant. Well, perfect background for this podcast today. Thank you so much for joining us. And finally, it's also another welcome to the podcast for James Callinan, Manager at Thistle Initiatives. Great to see you, James. Can you introduce yourself to our listeners? I think we've had some of your colleagues from Thistle on before, but it would be great to hear a little bit more about yourself.
Hi, good to meet you all. I'm James. I'm a manager within the credit, mortgage, and banking team at Thistle. So Thistle Group, we provide financial services, specialist regulatory consultancy, and change consultancy across a range of different sectors. So supporting firms across banking, financial crime, payments, credit, mortgages, insurance, investments, through authorizations, regulatory change, business transformation, and ongoing compliance support. I've got big shoes to fill because 2 of the partners have been on here before me. So hopefully it'll be fine.
No pressure. Well, thank you so much for joining us. That completes our panel for today. So let's jump straight into the news. And our first story is from City AM that NatWest, HSBC and Lloyds face rules change in regulatory shakeup. So UK banks, including NatWest, HSBC and Lloyds, are facing new rules around so-called debanking, requiring them to give customers at least 90 days notice before closing accounts, up from the current 2-month period. Under the changes, firms will also need to provide a clear written explanation for account closures, giving customers more opportunity to challenge decisions via the Financial Ombudsman Service. The move comes after a series of high-profile debanking cases in the UK and the US, including Nigel Farage's dispute with NatWest-owned Coutts, which sparked political backlash and led to the resignation of NatWest CEO Alison Rose. Debanking, where banks close or refuse accounts due to regulatory risk or reputational concerns, has become an increasingly contentious issue, raising questions about fairness, transparency, and access to essential financial services. The government says the new rules are designed to improve customer protections and restore trust in the system. So, let's start with the big picture. Clearly, this is a response to a couple of big public controversies, but is this actually a sort of systemic issue? James, let's start with you. What was your take on this one?
Yeah, so I think it's a positive, to be honest, and sort of more can be done to inform and protect consumers, within banking. I think it's more systemic than people realise ultimately. Very quickly, I worked at the Financial Ombudsman Service before I worked for Thistle, and before that I worked in branch at Santander opening bank accounts. So it's something that I have been exposed to quite a lot over the course of my career so far. Working with those customers that have been debanked, who are not high-profile cases, it really demonstrates a need for a bank account, and it can affect really quite vulnerable customers. And when you don't have a bank account, that makes life even more of a struggle. I think it is a positive step, and I think it is quite a big issue across banking, ultimately.
So obviously I mentioned that those sort of high-profile cases, that's at the very, very top end. You're obviously talking about more vulnerable customers. Where has this kind of change been driven from? Is it that kind of regulatory pressure, internal risk management? Like what sort of changed the story here?
I mean, I think the media coverage of Nigel Farage and Coutts presumably played a big part in that. But I do think there is sort of an ongoing conversation in ensuring access to bank accounts, and the two go hand in hand. That if we're debanking customers, when the bank feels that's appropriate, we also need to ensure that there is the safeguard there to access to accounts. But as I say, I'm sure that the media coverage with Coutts and Nigel Farage definitely played a part.
Yeah, it definitely got people talking about what debanking is in the first place, and sort of, sometimes you can know what the reasons are and sometimes you can't. And some of the changes here are about being more transparent about the reasons behind why people are being debanked. Michèle, what's your take on that? The kind of added layer of transparency that banks are now required to give, but without accidentally sort of exposing, sort of AML procedures.
I mean, I'm looking at this a bit more from the outside, I guess, right? I'm not in the UK. I live in Spain. I'm from Switzerland, where we actually, don't have, I think now, such good guardrails or protections for consumers as now the UK since a few days. I see it as very positive. I think we'll have to see how transparent that will really be, right? How much detail is that? Is it enough? Probably for the consumer, it's not going to be enough, right? They will always want to know more. But you kind of need to find that middle ground, enough information that a consumer understands, but not enough to kind of feed bad actors in the system. But I do also think that, I mean, it's a tension that it's a really difficult space for the banks also to operate in, right? Because they do have these compliance pressures, and I think risk appetite has gone down also based on, huge fines. And so it kind of counteracts that to some extent. I think, generally very positive. It will be more transparent. Will it be incredibly 100% transparent? Probably not.
Yeah, I would probably agree with that. Will, do you want to jump in here as well? Like, what's your take on sort of like that balancing act that banks are going to have to tread with this one?
Yeah, I think banks have always had to do something like this, and they're always going to be pushed by the regulators to open access a little bit more. I think this is just one example, actually, of a sort of a much broader growing distrust and dissatisfaction that consumers and small businesses have had with the established financial sector, where they've been cut off or restricted. I mean, I think about, just high risk merchant verticals. I think about a great example, American is trying to bank in the UK. It's harder to get a bank account as an American than it is to be an Iranian, apparently. And that's just an operational overhead, right, for sending tax forms back to the US, to the IRS. And so there's lots of reasons, cryptocurrency trading being another one, where people can't use the banking system for perfectly legal stuff. And there was always going to come to a point, I think, where regulators had to kind of force the hands of PSPs as well as banks to be a little bit more open. And that's going to have to come with maybe some more tolerance in terms of the regulatory side of things, or maybe some tools. We've seen, for example, an APP fraud industry tools being provided to help fight some of the more challenging elements of fraud. So, I think that's a direction of travel we'll see happening more and more.
Definitely. And James, talk me through the sort of extension to a 90 days rather than 60 days now. What is the main advantage to that, and who is that for? Is that for the consumer to sort of protest the changes, or is that for banks to get their arguments together, or both?
I think a little bit of both, and I think that is beneficial to the consumer, giving them extra time to sort out their affairs, try and get a different bank account, raise a complaint if they want to do that. And then also, if we think about the way that people use bank accounts, a lot of the time there'll be an overdraft and borrowing attached to that. So it gives them more time to repay that, so they can leave the bank without an outstanding debt there. I think the 90 days is a big part of this and is beneficial.
Mm-hmm.
I think the information that is supposedly going to be provided alongside the account closure will actually have more of an impact.
Yeah, absolutely. And Michèle, sort of as a marketer, marketing is often around like kind of creating that trust, creating that brand loyalty. Trust is also at the heart of this, right? In terms of, getting access to the information you need, being able to have that ombudsman to put a complaint into, whether or not it's upheld, etc. How much are these changes sort of stepping towards increasing that trust, do you think?
Oh, very much so. I actually wanted to bring that up. The topic, and again, coming from a place that doesn't have now these customer protections. I think the fact that there is an ombudsman that actually has power, right, is a huge deal, and it's even a bigger, for me, it's a bigger deal than the 60 to 90 days change, right? Because you actually have a place to go to. Switzerland has some sort of an ombudsman, but they don't really necessarily have the power to really do anything about it. And from what I read, right, this is different in the UK. And there actually, I have a question, and I don't know if anyone else in the room has an answer to that, but I actually wonder, how much can the ombudsman actually ultimately compel the banks to disclose, right? Can they get actually the enough information to, take a decision, whether that decision was right or wrong? And I think that is really the key to this, and really big question mark in the room, because that ultimately for me determines how much trust this will build the system.
James, not to put you on the spot here, but it feels like with your background, you may be the man to answer that question.
I can't give away secrets. No, so I mean, I had a little look at sort of previously published ombudsman decisions sort of ahead of this, just to sort of understand what is out there in the public domain. I think the obligation is on a bank to conduct a sufficient investigation, and so the ombudsman asks for details of that. They need to be satisfied that it is a stand-up investigation as to why this has been, why the account's been closed. Looking at previous decisions, there are examples of where that information hasn't been provided to the ombudsman and the account's been closed all the same, which I thought was fascinating. From my time there, I know that the ombudsman has, in the past, told a bank to reinstate an account. I think that is very rare and doesn't happen all the time. And actually, would you want it to once a relationship's got to that point? But it is within the gift to do that. It'll be interesting to see, once customers come to the ombudsman with that information as to why their account's been closed, how that impacts it. does that give customers, does it prevent complaints going to the ombudsman in the first place because customers have a bit more understanding around why they're in the position they find themselves in? Or does it make customers go to the ombudsman more because they have something that they can actively dispute? Either way, it's a win.
That's interesting. Yeah, we definitely have to see how that plays out, but that is an interesting second take on it. I feel like we can't completely ignore the political angle here, and Will, you kind of touched upon it a little bit in terms of it being harder to get a bank account as an American in the UK, etc. And obviously those high-profile cases that we have mentioned, looking at the debate around bias, fairness, access to banking, etc. Well, just to sort of close out this section, are we sort of looking at financial services being more politicized more broadly, do you think?
I'm not sure if financial services need to be more politicized. I think, in today's world where everything is sort of inherently more accessible politically, you're going to see high-profile cases like this get a lot of news and coverage. I think what you're going to see as a result of the fintech movement in general is financial services become more opaque and transparent. And I think consumers and businesses have a higher bar of expectation for what they should be able to do as a result of being exposed to great experiences through some sectors and still having to deal with subpar experiences in others. And financial services, especially in today's digital economy, right, are vital to the success of so many businesses and to consumers who are just trying to live their lives. That if you get cut off because of stringent anti-money laundering rules, or you experience that kind of opacity, that's going to get a lot of attention. So I don't think it's necessarily inherently more political. I think it's just there's greater access, there's a greater ability to communicate on Twitter about what happened to you. And so there's just kind of more exposure. And there's a kind of a vicious flywheel for banks, right, in which they're kind of up against all sorts of challenges as a result of it.
Absolutely. So perhaps less being politicized and perhaps more just like scrutinized more broadly because of access to sort of social media and general online commentary.
I mean, they enjoy a privileged position, right? Banks, like they are essential infrastructure and they are private companies that nevertheless act as essential infrastructure. So I think they're always going to be in this really challenging position where, we always say in payments, right, is the most important process, the most important thing to anyone is the movement of money. And that can't be something that's hamstrung if you're not doing anything illegal. I think most people would kind of agree on that. But at the same time, I think we all appreciate the challenges that banks are under and the environment in which they have to operate. So it's a continuously challenging picture for them. And it's one that's played out across all forms of social media and traditional media.
Completely. And, here we are feeding into that. But yeah, I think you're completely right. And James, let's see how this one plays out and it becomes that sort of benefit that you've outlined. I'm going to move us on to our next story, which is that Dutch payments processor Adyen agrees a €750 million deal for loyalty and incentives platform Talon.One. Berlin-based loyalty and incentives platform Talon.One, which serves more than 300 global merchants, including brands like H&M and Nordstrom, and is expected to generate around €60 million in ARR by the end of this year. Adyen says that this deal strengthens its unified commerce strategy, bringing together payments, customer data, and real-time decisioning, so merchants can not only see what customers are doing across channels, but act on that insight instantly. By combining Adyen's transaction data with Talon.One's incentives engine, merchants will be able to dynamically personalize offers, pricing, and promotions directly at checkout based on who the customer is. The company also sees this as a step towards enabling agentic commerce, where purchasing decisions are increasingly automated and influenced earlier in the buying journey. And this deal is expected to close in the second half of this year. Will, I would love to come to you first on this. I know that you kind of wrote a LinkedIn post kind of analyzing the play here. So kind of what do you think the gain is essentially for both sides here? You've definitely mentioned the sort of loyalty piece for both Adyen and what Talon.One brings to the table here. Can you dig into that a little bit more for us?
Yeah, I think this is a pretty big deal in many ways, right? Not literally in terms of the value here, but the fact that Adyen has gone out and purchased this company when Adyen has no track record in acquisitions whatsoever. It's a famously non-acquisitive company, right? It's a huge signal to the intent and the value of this kind of capability for Adyen's longer term strategy. And also a signal of its urgency in some ways, right? The fact that they felt that they needed to go and buy this rather than build it themselves, which is their MO. So I think less about, the headline number of this, and even then it's kind of within expected multiples for kind of MarTech sort of businesses that are this successful with this kind of client base, but more around what it's going to do for Adyen. And Adyen is famous for being a single stack unified commerce provider, which is their terminology really for having a single stack that serves all kinds of payments channels online and in store. Everything in-house, everything native, one point of integration, bringing loyalty decisioning within the checkout flow that has a single view of the customer across all of your channels is a huge synergy. The fact that it makes it much more accurate in a world where loyalty is already super, super hard to make any money out of. Every decision is a challenge between how much money do we spend on discounts versus how much are we getting back in increased revenue from the customer. That's a really fragile equation. This drives that ROI really high and probably opens the door for more businesses at a lower scale to get access to loyalty easily. And then I do think there's an agentic play here as well, as you mentioned. So, I think this is something that is, Adyen probably see this as vital for their long-term differentiation in an increasingly saturated acquiring space. That's the way I'd read this deal. Less so, this is a value creation play based purely on the asset.
Sure. Yeah, no, that's very interesting around them. Yeah, I didn't actually realize that. But yeah, them not actually acquiring basically anyone and then deciding to just go out and buy these guys with all urgency probably reveals more than it says, I imagine, about what their sort of strategy is going forward and so on. So that's really interesting. And to that broader point that you made there about what it means for Adyen going forward. James, what does that make Adyen now? We kind of talk about them as a payments company. They're looking at being that sort of one unified infrastructure stack. Are they sort of moving beyond, being a payments company into something much, much broader now?
I think so. I mean, ultimately, I think they would still have payments at the core of the business, and that is going to be, continue doing what it's doing. And this is in addition to that. There's a lot of talk around sort of everything apps at the moment in terms of sort of the WeChats or the one-stop shops, and maybe it's an idea to sort of move certainly in that direction. I mean, you can see how the two align and how they work together in terms of sort of their client base and the end consumers that are there. So yeah, I think it's watch this space, but I think payments will sit at the forefront of that.
Definitely. But also, Michèle, coming to you, sort of a lot of this integration of both sort of camps is around that data and being able to action it in real time, understanding customer behaviors across multiple channels, and then being able to act on it instantly, as Will said, sort of offering people discounts at the point of checkout, loyalty points, et cetera, et cetera. How big a deal is that for Adyen to be able to do for the number of merchants it has and so on for this by way of this acquisition?
Well, I would say, and I would agree with both Will and James, that it's a big deal. And again, just that the fact that they acquired this company, I think, signals that it is a big deal. I think everybody's looking into getting a bigger pie. I think it kind of signals where the value sits and where the value will sit going forward, right? It's not moving money from A to B. It's not a pure processing layer. It's actually the data, knowing who the customer is, what they want, when they want it, and so forth. And all of that data, and here also what Will mentioned, going into agentic commerce, obviously data. Data is king, queen, and everything in between. You need data, and that's what I think that's what it is about. But actually, I find a really interesting point here is that everything that Talon.One does, right? It's really kind of that human component that getting you over the finish line, right? Getting you the offer at the right time. But when you talk about agentic, then you suddenly have a machine making the decisions. And then where does that maybe human layer play, right? How will the AI agent, and I never say never when it comes to AI, right? But that spur of the moment decision to actually make that purchase because of that offer, right? Can an AI agent do that? And so I think it's a really, really interesting how that whole space will develop over the next few years.
I love that you brought this up because I think that actually this is almost a defensive play against agentic in some ways. Adyen is going to be all over agentic in terms of pushing it, of course. But at the same time, merchants are really worried about agentic to an extent, right? There's a huge loss of customer interface, the loss of human connection with your customers and the data that comes with that, right? And the ability to cross-sell that agentic brings. And one of the things that I also think is a risk because of agentic is all of those loyalty offers that we get today, the ones where, you go on Honey and you scrape a code, or the one where, there's a limited time sale. Agentic's going to be really good at finding those and optimizing for those. So that money that they're already spending on discounts is going to go higher and higher and higher because they're going to be scraped off the shelf by bots. So I think this is actually a play in many ways for Adyen to be able to bring those offers to a place that bots can't get to, which is where you've already gone through the checkout flow, you've built a basket, you're at the point of the checkout, and now you're offering someone, a human, based on their actual customer insights that they've done across the store, across history, stuff that's much harder for a bot to get to. You're offering that person the offer at that point in the flow. And that, I think, is going to be a lot more efficient for a merchant to serve than offering shelf-level discounts that all agents everywhere will have access to. I think this makes it a little bit more contained, and it gives Adyen an edge against other PSPs who won't be able to protect merchants from agentic in exactly the same way.
That's so interesting. Particularly as they've sort of made a point about, it playing into their agentic commerce strategy. But, it doesn't have to be pro, I guess. It could be a preventative move all the same. It's not clear. But that's such an interesting
I'm going to get a phone call now from Adyen saying you guys have got that completely wrong.
Okay. If we're wrong, we will say we're wrong.
That's maybe a spicy take, but
we welcome those.
But I do think they probably need to prepare for both worlds, right? Because I think it will coexist. Both worlds will coexist in some way, at least for a while. The agentic, which will become more and more for very functional repeat stuff, right? Which is already happening in some very small areas. But the human thing, the human part of the purchasing process is not going to disappear in a few months. I think that's going to take quite a long time. So I think both, and for both, you need the data. So ultimately, the data play still holds.
Yeah, absolutely. And James, what's your take on this, particularly as it sort of shifts towards personalized pricing and promotions, as we've said? Obviously, that all sounds great on paper. Will's kind of mentioned merchants' hesitancy around the sort of AI nature of it. How about the customer? Is this something they're going to reach for with both hands, or is there going to be a little bit of that sort of reticence around trust and so on that we spoke about in the previous story?
Yeah, for sure. And the personalized pricing point is fascinating. That how that interacts and sort of what that looks like from a consumer point of view. Like for me as a consumer, it's great. If I think about it as a regulatory compliance consultant, there are a lot of challenges within that, and I understand it's not a regulated environment a lot of the time, but I think there are concerns around sort of like fairness and transparency for personalised pricing, and to the other side of that, sort of predatory pricing where everything's £10 unless you've got a unnamed club loyalty card, in which case everything's £5. So using that data to bring customers in and to reduce pricing is positive, as long as pricing is fair in the first instance, I guess.
Yeah, absolutely. And Michèle, maybe final word to you on this one. Obviously, sitting in Europe as you do, and as does Adyen and both Talon.One, is there a sort of cultural take on this about, kind of European merchants or customers even? We talk about sort of loyalty and rewards programs typically being a US kind of focused initiative. What's the kind of European appetite for this?
Oh, wow. I can answer this maybe from nowadays, maybe from a Southern European point of view, because I haven't lived in Switzerland for more than 10 years. So it's very underdeveloped, I think, in general. So I think there's a huge market for this. But I think people are getting the appetite now. You actually get these programs and loyalty programs more and more from, telcos and they're all over the place, right? Distributed. There's startups popping up, obviously, trying to push in that space. And I think now, before it was so complicated, you had your 20 cards, right? And now it actually, even with AI, I think it's going to become much easier that actually someone takes care of that and makes sure you get the right offers at the right time. I think it will become more important. It's something that people, especially in the macroeconomic environment, inflation, things are getting more expensive. They are, probably more hungry for it than maybe before. So that would be my kind of just opinion on the spot.
No, that's great. Yeah, I mean, very possibly given all of that sort of macroeconomic stuff that you just talked about, like this has come along at exactly the right time for exactly the right market. So we, wish the partnership well, and we will keep an eye on it and see how it progresses. But on that note, just going to take a very quick pause here. Back shortly.
When you need to build up your team to handle the growing chaos at work, use Indeed Sponsored Jobs. It gives your job post the boost it needs to be seen and helps reach people with the right skills, certifications, and more. Spend less time searching and more time actually interviewing candidates who check all your boxes. Listeners of this show will get a $75 sponsored job credit at Indeed.com/podcast. That's Indeed.com/podcast. Terms and conditions apply. Need a hiring hero? This is a job for Indeed Sponsored Jobs.
Ready to soundtrack your summer? With Red Bull Summer All Day Play, you choose a playlist that fits your summer vibe the best. Are you a festival fanatic, a deep end DJ, a road dog, or a trail mixer? Just add a song to your chosen playlist and put your summer on track. Red Bull Summer All Day Play. Red Bull gives you wings. Visit redbull.com/brightsummer ahead to learn more. See you this summer.
Before we get back to the news, we wanted to tell you about our latest Insight show. We've teamed up with our friends at PPRO to dive into why APAC merchants are expanding rapidly into Latin America and why payments will ultimately decide who wins. It's out now. Just head to the episode below this one. And now back to the news. Our next story is that Revolut are to open their first physical store in Barcelona. The story in Euronews and many other places. Revolut is set to open its first ever physical store in Barcelona, marking a move into brick and mortar retail for the digital-first fintech. The company says the space will not be a traditional bank branch, but a high-visibility, immersive environment, quote, designed to engage customers and make financial services more accessible. Revolut says a physical presence could help build trust with customers as it continues to pursue banking licenses globally and position itself as a full-service financial platform. The Barcelona store is expected to be the first of several as the company explores how physical spaces can complement its digital offering. So, this is an interesting one. So let's kind of take a step back and look at the big picture. So Revolut, one of the biggest digital-first fintechs, is opening a physical store and particularly picking Spain as its first market. Michèle, based as you are in Spain, can you tell us more about this? What's your sort of take on this? Why a physical store? Why now and why Spain?
So many things to unpack here. It doesn't come as such a surprise, I think, because it's not like Revolut is new to Barcelona or new to Spain, right? They have been around for quite some time. Again, I think they're the fourth bank in Spain now by market share in terms of people actually having a bank account with them. But yeah, they in Barcelona, they've built their tech hub, Southern European tech hub. I think they have like 700 employees there. And in addition to that, they also actually built and tested the ATM concept out of Barcelona and in Spain, right? So it's funny because it's not actually even the first physical testing ground for it, not the first physical product. It's actually the store is almost like the second one that they launch again in Spain. And I do think it makes sense from that point of view, right? They have the talent there. They already have experience there. They have a huge staff, and obviously it plays into the Spanish, I guess, cultural idiosyncrasy, if you will, because I think in Spain, people are very digital, very digitally sophisticated on the one hand, but then it's still quite a cash-heavy society. So that plays into the ATM story, right? Why in Spain? And then the physical store, same thing again. In Spain, at least the Spaniards are very much married to their incumbent banks. I think I haven't met a single Spanish person that doesn't have a bank account with one of the big ones, right? Be that any of the cajas, but then Santander, BBVA, whatever it may be, right? They all have kind of one solid bank because you need that in some way to deal with the administration, bureaucracy, and all of that. So that I think the neo and digital banks haven't been able to solve. So really putting, I think, a face to the bank, and actually, it actually says bank, right? The physical place. It says, okay, we are serious. You should take me serious. We are not just digital. But yeah, I think Spain, from that point of view, makes a lot of sense.
Fantastic. Yeah, I mean that's just really great context for why they've done this in that particular market and in this way. Kind of building on that, Revolut has said that physical space helps build trust with customers, and kind of to Michèle's point, that's very illustrative in that Spanish market where everyone's sort of got that primary bank account with one of the big banks. What do you think is driving that? Do people actually trust financial services more when there's like a bricks and mortar physical presence? Is this about trying to stand out in a crowded market or even blend in so they look like one of the established banks in this market? What do you think is the correlation between trust and physical presence?
Honestly, I don't know if this is actually that much about trust. I think trust from physical stores in financial services is a strategy that players have employed, like Metro and Nationwide in the UK. But that kind of requires like a ubiquity and, a buck against the trend, right? So you need something where your nan can see her local branch on the high street, and it's there for her, and she can go and get cash, and she can go have a conversation with someone about money. Like that kind of presence is valuable. It absolutely builds trust. And in the UK, I think there's been a lot of effort, right, to try and preserve that kind of touch point with customers in the physical banking world. But I don't think that that's what Revolut's really going for here. This is a brand that sees themselves as like more than a bank, all right? They have a much broader product suite. They appeal to like a different customer. It's all international travelers, mobile first, cross-border business. It's premium. It's not friendly in that way. Where Monzo is like all about flexible payments and like visibility and customer service, Revolut's metal cards and crypto and Perplexity Pro in its premium account. It sponsors an F1 team. Like this for me is a glitz and glam statement. It's them saying, we're here and we're cool and we're sexy and we're building like an Apple store for financial services, like a sort of an experience, as they say, right? This is not where you're going to go and have a conversation with someone about your mortgage in the same way that you would at a Nationwide. And so I think trust is like a good marketing thing here, but I think really the marketing angle here is we're making a splash and we're cool and we're big. They've just got a banking license, so they're doing a lot of that right now.
Yeah, completely. I really like that take. I think they're sort of taking a stand of like announcing themselves. This is who we are. This is what we are about. We are a bit more aloof. If Monzo's for everyone, we're for, more of an elite group potentially, like kind of just putting their markers down of who they are. But to your point around, we've seen a lot of digital players taking on more physical presence, like Metro are opening more branches, and also traditional banks are starting to reback their physical presence. So Barclays, we've reported on this show a couple of weeks ago, have said they're reintroducing local managers and reopening branches. Chase in the US is opening 160 new branches across 30 states. James, what's your kind of take on that? Is the industry kind of moving towards a hybrid model? Have we kind of got past the everything should be digital kind of mindset? What's your take on that?
I think it's serving the market, right? And I don't think that physical branches are required anymore. I don't think they're needed. We can perfectly have a digital bank, and then that's proven that it works. But I think there will always be a place for that. And some of the things you can do in branch, you would really struggle to do digitally, for sure. Those sort of really complex cases or real specialists or power of attorney accounts or things like that. You need to go into somewhere to sort that out. So I think there will always be a place for it. What does a bank offer as well? I think a bank can be a place of education, of cross-selling of products, of upskilling customers to use digital channels, as well as banking. And I think that sort of transactional side is almost kind of ancillary to the other things that a bank can offer. Like if you look at what Santander have done recently with sort of the work cafe stuff, it's a cafe with a bank, right? Rather than a bank with a cafe.
It's great.
It's a good place to work because I still haven't been in there to actually do any work.
No, that's very good, and they give you a free coffee. It's actually nice.
Yeah, the Capital One
I was reminded when I saw Revolut, I was reminded of that. But I do hope Revolut, does better. But yeah, I think it is. I think it is a good thing. It's a good strategy that they launched with them.
Sure. And just one last thing on the banking sort of physical presence. Like banks serve communities ultimately, and actually having a physical presence in a community and being a part of that, I think is a really positive thing. And I think it's just getting that balance right of what it's used for, because as you say, going in to pay a check, maybe not, but there's a lot more outside of that.
Yeah, sort of that experiential kind of activity around it, and sort of, as you say, like a cafe that happens to do banking is probably more enjoyable and useful to a community more broadly than just being able to do some outdated services. But it will be interesting to see how the Revolut one plays out. I mean, Michèle, do you think this scales? Do you think, is this a one-stop shop, like in sort of Will's sort of Apple Store example of like, is this the flagship and there might be more, or is this, a one-off? What do you think?
Not sure how to make that prediction. I think, and picking up on, I agree. It's not maybe about trust per se in that sense, but I do think it's about identity and loyalty, right? Again, and it connects to the bank license because you want Revolut to become your primary bank. Because I think, especially also in other markets, it's the second bank, right? It's one of the, it's not your primary bank, right? So it's also kind of, and I think I agree very much with Will there, it's really making kind of that, that mark and saying, hey, we are here, right? And we are actually to be reckoned with, and we are cool. And actually draw that comparison to the Apple Store, which is very brave, I think, because obviously Apple, when they launched the Apple Store, they made a huge splash. It was a huge thing. They had, it was such a pure representation of their identity that they previously built digitally. And I think that is now the challenge that Revolut has, is actually how do they make that, how do they translate that? How do they even define their digital identity into a physical space? Because they lose, if it's just a bank that is a little bit cooler, then I think they've lost, right? Because they now put expectations out there. It really needs to be a statement. And yes, I actually do think if it works in Barcelona, because Barcelona is also, it's actually the perfect place as well, because lots of people from everywhere, digital nomads, expats, young people, design, tech-savvy people, and so on, right? A huge tourism destination as well. I think on the one hand, they will probably attract a lot of new customers that way. But on the other hand, I think if it works there, they will definitely expand. But I think it will be statements everywhere, right? I don't think they're going to be in your like neighborhood, like having branches all over the place. I don't think that's the concept, right? It's going to be London, New York, I don't know.
Flagships,
HQs,
kind of thing. Yeah.
There's one construct actually that just comes to mind, right? And when you think about what Revolut is as a business when it's positioned itself internationally, if I were to make a prediction about where this goes, I think they're thinking about physical spaces, and maybe this is a bit of a trial run. But where does banking, where do cards make sense in physical spaces? I think this might go in like a lounge territory. You look at airport lounges, you look at event spaces. If I were to put a hot take on this, I think they might think about, okay, how can we make a Revolut card member, a Revolut traveler, have access to premium experiences? Where can we do stuff and collab with other brands or whatever it may be, right? How do we become the next Amex, which is, as you know, right, oversubscribed? It kind of lost some of its value proposition at this point. Is there going to be the Barclaycard BA kind of effect going on here? That's where I think this goes, aside from just like the loss leading marketing event space in major cities.
Nice. I love that hot take. We love a hot take. And I think, I could well see that being the case. It sort of joins up all of Revolut's propositions, starting with that sort of travel money that you talked about as their sort of initial proposition, and then starting to go premium and then adding premium services on. So I think that could well be the case, but I think we may have to wait and see. But on that note, we're just going to take another quick pause and we'll be back very shortly.
Kayak gets my flight, hotel, and rental car right, so I can tune out travel advice that's just plain wrong.
Bro, Skycoin. Way better than points.
Never fly during a Scorpio full moon.
Just tell the manager you'll sue. Instant room upgrade.
Stop taking bad travel advice. Start comparing hundreds of sites with Kayak and get your trip right. Kayak. Got that right.
Okay, now for a quick look at a story we don't have time to cover in full today, and this is that Birbank rolls out sign language video call feature in Azerbaijan. The story in the papers, Birbank has launched an in-app sign language video call service, becoming the first bank in Azerbaijan to introduce this capability. The feature allows customers to communicate directly with bank representatives using sign language within the app, removing the need for third-party tools or in-branch visits. The move reflects a broader shift in financial services towards embedding accessibility directly into digital products, rather than treating it as an add-on. For many customers with hearing or speech impairments, real-time interaction with financial institutions remains a challenge, and this kind of functionality aims to close that gap. Birbank says accessibility is a core part of its product strategy as it continues to build out its wider ecosystem across banking, payments, and e-commerce in the region. And while this is very interesting, Birbank is not alone here, but it is still a relatively early stage globally in terms of offering sign language, which is really why this one stood out to us in particular. So a few examples from around the world are a little bit closer to home. Barclays have introduced Sign Video, which allows customers to connect with British Sign Language interpreters via video banking. Lloyds offers a British Sign Language video relay services across all of its brands, so Lloyds, Halifax, and Bank of Scotland. Bank of America provides ASL, so American Sign Language, video support via appointments and some digital channels, and also integrates accessibility features across mobile banking. And some fintechs, such as M26 and Bunk, focus heavily on accessibility design, but real-time sign language support is still rare. And I think that's why this story in particular is so interesting, because accessibility is often very high on kind of people's design radars, but actual sign language is one of the last things to be addressed. So I think this is really interesting. And it's particularly interesting that it comes out of a region such as Azerbaijan and that they've put that so high on their product roadmap strategy. So I think this is one we'll keep an eye on to see if this is replicated by other banks either in the region or further afield, because it's definitely a piece of accessibility that often gets overlooked, and it'll be interesting to see how this progresses. So I'm going to take us to our and finally section. So I don't know how often your takeaway habits get analysed, but this might make you think twice before your next order. And so our and finally story today comes from news.com.au. Samir Nasri faces a $9 million tax bill over Deliveroo orders probe. Former Arsenal and Manchester City midfielder Samir Nasri has found himself at the centre of a rather unusual tax investigation in France, where authorities are reportedly using his Deliveroo history as evidence. Investigators claim that he may have been living in Paris while officially declaring himself a tax resident in Dubai. And one of the key data points, 212 Deliveroo orders sent to a Paris address in 2022. Authorities argue this points to his centre of vital interest being in France, a key legal test for tax residency alongside travel records, property ownership, and media work in the country. If this is upheld, he could face a tax bill of around 5.5 million euros. All right. What do we think of this one? I mean, the first point, 212 Deliveroo orders in a year, more than one every 2 days. Feels like a lot for a professional footballer. But also, at what point does your takeaway habit become legal evidence? Will, what was your take on this one?
I was a bit surprised that it kind of got to that, I guess. I mean, phone records and all sorts of similar digital footprints have been used in this kind of investigation for a long time. And as the unfortunate person who's had the experience of trying to file different state tax returns in the US, I mean, some of the things that they make you go through showing that you don't have connections, right, that you didn't pay a water bill in whichever country, whichever state. Yeah, it surprises me that it went down to the level of Deliveroo. What I probably think is more interesting than that is to what extent this data will become commoditizable to investigations, and to what extent it probably has already been for some time. I would have thought that eating and drinking and commuting, like TfL probably has a very accurate representation of how we all move and live in London, and a million other such examples. So yeah, I think Nasri probably doesn't have much of a leg to stand on if it's got down to the Deliveroo state.
Yeah, they've absolutely gone deep on his records if they're all the way down to the Deliveroo receipts for sure. James, what was your take on this one?
Yeah, I mean, it's getting caught out for Deliveroo seems, that being out in the public seems a little bit unfair, but I'll let it go. I think it's good that the data's there ultimately, and if that data can be used for what is a good purpose, tax evasion isn't the best thing in the world. So if that data's there, then it is. And you have nothing to hide, then it is a positive. But as Will said, right, it's all around us, from TfL to the car insurance app on my phone to anything else. If you think about how data can track where you are, there really isn't much room to hide.
Yeah, absolutely. And there's so much data that, your traveling data, your eating and drinking habits, maybe your hotel bills, even it's suggested, like gym check-ins, etc. Things you do by habit that indicate that you are permanently in one location, or at least for a prolonged amount of time, could stack up. Michèle, what was your thoughts on this one?
Well, surprised and not at the same time, right? Because I know Spanish and I think French is not so much different tax authorities. I don't think they joke around a lot, and they will definitely find a way to get to the bottom of it. I think it is a very good reminder to everybody that everything you do digitally leaves a footprint. Right? So if you want to hide something, you'd rather go get some cash out and do it the old-fashioned way. But yeah, I mean, generally, right? I think, if the data is there, like your life lives somewhere. And then, I mean, it could go like really serious and deep on data privacy and who owns the data and who should have access to what and how can you actually make sure that, the data is yours and who can get it. I mean, it's a huge minefield. But yeah, a reminder, don't perhaps if it turns out that is really the case and his center of vital interest is not in Dubai, you probably need to be a little bit more careful.
I mean, to bring it back to sort of like a boring fintech point, right? I think that there's going to be a point where Google, Meta, these guys do get queried fairly regularly by government agencies about users' online history and what they're saying and, just the telephonic footprint, right? But it's probably true that all these other apps and all these other things that have increasingly richer data on us might need some kind of protocol or some kind of interface where they can actually facilitate what is effectively a lot of subpoenas for this kind of data. Or in the other direction, maybe there's going to be some kind of consumer protection, right? Some kind of pushback where some kind of GDPR, where you can say, actually, this is not fair game in the grand fight between people trying to scrape tax and people trying not to. That actually, there will be some kind of protocols that protect this kind of information. That it's going to be I think it's going to be something that these, like if I were building an app today or an asset today that had that kind of information, I would be thinking about this eventuality that I would need to build a way to respond to government requests on the data of my users.
Nice. Well, we will have to keep an eye on that to see whether, your Deliveroo data gets protected or it is fair game for ongoing financial investigations. We're yet to see whether this is upheld and he does have to pay a massive tax bill to the French authorities. But to your point, it may not be the last of these kind of examples that we hear about. And on that note, that wraps up today's show. Thank you so much to today's guests. Where can people find out a little bit more about you and your companies, starting with you, Michèle?
Sure. I mean, you can find me on LinkedIn as everyone, right? And check out Tenity.com for everything in detail about what we do. I would love to connect.
Wonderful. Thank you. Will?
So you can find Flagship at flagshipadvisorypartners.com or on LinkedIn. Outside of the work that we do as strategy consultants, we publish content at least weekly on topics such as these through all our channels. So there's a mailing list, go sign up. We do over 1,000 executive interviews a year, and sort of 20 to 50 surveys a year, depending on the type of projects that we're doing. So there's a lot of rich data that we end up putting out into the world. So go look us up and feel free to consume some of that.
Brilliant. Thank you. And James?
Yeah, much the same. You can find me and Thistle on LinkedIn. Or thistleInitiative.co.uk, where you can see what we've been up to, relevant blog posts, interesting work that we've been involved in recently is all up there.
Brilliant. Thank you. As for me, you can find me, Laura Watkins, on LinkedIn or otherwise 11fs.com, where you can find out more about all of our content that we put out, not just this podcast, but also all of the wonderful work that my colleagues in the 11fs consulting and Pulse teams do. Or otherwise, you can reach me and the team on podcasts at 11fs.com. Thank you so much for listening to today's show. If you like what you've heard, please make sure to follow us on your favorite podcast platform of choice. And if you really like what you've heard, why not share it with a colleague or a friend? And if you want to join the conversation, find us on social media. Just search for 11FS or Fintech Insider and you'll find us. Thank you so much and goodbye.
Ryan Reynolds here from Mint Mobile with a message for everyone paying big wireless way too much. Please, for the love of everything good in this world, stop. With Mint, you can get premium wireless for just $15 a month. Of course, if you enjoy overpaying, no judgments, but that's weird. Okay, one judgment. Anyway, give it a try at mintmobile.com/switch.
Upfront payment of $45 for 3-month plan, equivalent to $15 per month required. Intro rate first 3 months only, then full price plan options available. Taxes and fees extra. See full terms at mintmobile.com.